In terms of forecast for 2011, at the moment, what we're going to see is marginal growth. Okay, so in terms of regional growth, North America again is looking more positive than Europe, but still it's only going to be 2-3% in terms of unit volume sales, and that would obviously be the US and Canada. Latin America is going to be posting some relatively strong sales, but it's not going to be on the back of big growth within Brazil, which is what everyone thought within Q1. It's actually the other markets bouncing back from recession. In terms of Europe, obviously, it's going to be a very tough market, and I think we're going to see a lot of countries, possibly Portugal, possibly Greece, Spain, for example, are going to suffer through 2011 as well. We're seeing only marginal growth. What we're seeing on the grounds at the moment is Portugal is still declining in unit volume sales. Italy is about 0.5% in unit volume growth, and that's including a stimulus package, which again was quite indifferent there. In Greece, we're actually seeing very, very marginal growth. This is 0.1, 0.2%. However, we may actually look at downgrading that. In terms of 2011, therefore, we would expect some of these markets to actually fall back in terms of growth. But then you look at other markets like the North American market that reacted quite favourably during Q1 and Q2 to stimulus packages. That drove sales through Q1 very, very heavily. We've seen a decline during the end of Q2 in terms of reports from AHAM, Whirlpool, etc. And the Brazilian market as well, the outlook was 10% increase on volumes, which is, considering it didn't decline too heavily during 2009, that's strong growth. On the back of it being emerging markets and very low penetration rates for refrigeration and washing machines and cooking and things like this. So there is potential, but what we're seeing now is there's actually a risk that when stimulus is finishing, we're actually going to see a decline back down in sales, and that's the problem. You can actually see a double dip in sales. So in terms of where the stimulus is and whether it's actually driving the market at the moment, there's a real possibility that's actually driving that. So in terms of organic growth potential, there is a possibility that it's actually quite marginal, and that is the risk for the international market at the moment. In terms of stimulus packages for China, the stimulus package brought in last year for rural sales to China really drove the market sales. However, the fundamentals for the Asian markets are very, very strong. So in terms of the big declines, we saw the big declines in the North American market and Western European markets, the big developed markets. So in terms of recovery, where the recovery is, the big risks are those markets still, because the recovery time is actually quite limited. In terms of outlook for Western Europe, it's growing, but it may be very marginal growth. We'll see 2010. We may see some countries dip down in terms of unit volume sales for consumer appliances, especially major appliances, over 2010, even 2011. We now focus again on Europe. We're actually seeing that it is driving some of the sales, but we're seeing an indifferent response. So at the moment on the ground, we're getting feedback from the in-country analysts is the fact that we're seeing marginal growth, 0 to 1.5% in terms of unit volume growth. A lot of companies, Whirlpool, Electrolux, Indesit, reckon that it's going to be about 2% this year for Western Europe. I would say that is over-optimistic. I would say that you're going to see marginal growth, 0.51% for Western Europe, excluding Turkey. And it's basically because the stimulus package is not driving enough consumer sales at the moment. What we're seeing is that the favourable outlook for the big companies is the fact that they're selling back into the market. The retailers destock very heavily. Now you get an upswing because they obviously need to get stock back. But if consumer demand doesn't increase over Q3, Q4, there is real potential that the market drive over Q1, Q2 in terms of sell-in is going to dissipate through Q3 and Q4. And that is actually a real risk for the European market. In terms of where manufacturers are expecting to see the growth, it's really a growth within refrigeration in terms of major appliances. So the over-optimistic outlook is really based on the Q1 upturn from sell-in into retailers. And then obviously Q3, Q4, we'll actually see if consumer demand actually is going to drive sales, which, as I said earlier, analysts on the ground are not expecting that actually to be the case. But in terms of the major growth, it's going to be within refrigeration and also the home laundry sectors. That where we'd see it. Because it's the other categories are less essential as such. So you can actually, especially for Europe, you can actually go out and not actually purchase a smaller appliance, for example, in terms of food prep. You don't have to go out and replace it. It's more a non-essential purchase. However, saying that, obviously there is going to be a bit of a bump from people moving away from major appliance categories. So instead of replacing a large cooking appliance, you can actually go out and replace, for example, something within the kitchen. In terms of steamers, we're seeing a macro health trend, obviously driving some of the small appliance categories. So you will see a bit of movement, a bit of change within the entire portfolio of products. In terms of obviously the manufacturers which are at high risk at the moment, I'd suggest that the one which is really at high risk would be Indesit. Obviously, there are Bosch and Electrolux which are posting relatively favourable Q2 results, but the problem there is that they actually have quite a good geographical footprint. So they have sales within Asia, Latin America, etc. So the claims that Electrolux operate in 150 countries, for example. Also, they have production outside of Western Europe and Eastern Europe, and that's a big key thing. So what Indesit, for example, have done is they have actually got rid of, say, 3 manufacturing facilities within Italy, and they're focusing on European, pan-European, including Eastern European production. But they haven't got any production outside of that, and that's actually going to be a medium-term problem. They've also invested heavily in a new brand called, they're invested in a brand called Scholz, which is super premium. And again, in terms of outlook, we've said that it's going to be a really tough operating environment for Europe. And if you're going to target the super premium section, you've got to hope that consumers are actually going to pay a premium for products. So investing heavily in Scholz, the Scholz brand, does seem as though it's going to, for medium term, it may be a correct strategy, but for short term, it's going to have its problems.